Hey everybody, how you doing? This is Tracy Phillips with the Phillips Group. I'm here with my man Dan Williams from C2 Financial.
C2 Financial, correct.
C2 Financial, trusted expert in the field. We wanted to get the conversation going on a really hot topic, pretty important. Dan, I'm running into a lot of guys, especially military, starting out young in the area. A big question that's coming up is, how do we know whether it's more important right now to be just renting a property, or how does one kind of assess whether it's probably a good idea to purchase?
Well, of course, everyone's situation is different.
Mm-hmm.
But, you really have two choices, right? You can rent or you can buy a house.
Right.
Renting's easy to understand. You go find a place. I know it's hard to do in this marketplace.
Tell me about it.
You go find a place, you sign a lease for X amount of months, X amount of years, and you pay that much. Everyone understands that. Buying a home, many people just don't understand how straightforward it can be, how impactful it can be in your life, but most importantly, what I'm getting feedback, and I know you're hearing the same thing, is I'm tired of my rent going up.
Right. It's pretty common. 12 months, you're at a lease term, standard, 10 up to 15% increase in your rent.
Right. I mean, what do we hear? Hey, my rent's gone up $300 a month. I've got to stop that. Because here's the problem. Okay, I can digest that first rental increase, right? Yeah, I'll grin and bear it and do it. But then again next year, and then again next year.
Right.
And because there's such a shortage of homes for purchase and for renting, the people who own those rental homes, I'm going to just keep up in the rent till someone tells me no.
Yeah, and it's almost like, and if you want to move, then I'm just going to get somebody else. I'm going to increase the rent right then as well.
Right, and that home that you're going to move to, guess why that one's empty? Because that landlord kept bumping up the rent.
So the cycle continues.
Yeah, and so we're hearing it so much. You and I both deal a lot with people that are retired or active duty in the military, and the VA benefit is so powerful. I've had people describe it to me. It's the most amazing benefit we have when they're in the military.
Absolutely. So just for everybody's awareness, kind of where are we at right now with everything going in the economy, and what kind of person interest rates right now? How are they doing?
So today, depending on credit score, that's a big issue. But I'm seeing things in the mid to high threes.
Wow, we're back there again.
Yeah, we're under 4% again, and that really impacts that monthly cash flow because that person renting is going to say, okay, I'm paying $3,000 a month in rent for my family.
Right.
What can I buy for $3,000 a month? And the average E5, E6, E7 can afford that, assuming their credit profile is clean elsewhere, because they're going to see that $580,000, $590,000 home. Total payment's going to be $3,200, $3,300.
Right.
And you own the place.
Absolutely. And me coming from the property management side, I happen to know right now, if you're thinking about renting in a place like Imperial Beach, you're looking at rent that's going to be, $3,000 a month. Give or take, it's going to be so close to $3,000. It is $2,950 to $3,000. That's just the market rate right now. What people are paying for a 3-bedroom, 4-bedroom. If you're going to be in a nicer area, newer place, like Eastlake, you're really looking at like $3,400 a month.
Yeah.
So on the flip side of that, what is a person looking at? If right now they're paying, $3,400 a month, or they're paying between $2,900 and $3,400 a month, what are they looking at for a mortgage?
Well, the purchase price, you mean? Well, yeah, you're looking $600,000.
Wow.
Right in that, plus or minus a little bit, but $600,000 is equivalent monthly payment, all in. More importantly, when you have that 30-year fixed mortgage, there's no landlord after 12 months saying, hey, your rent's going up.
Absolutely. And I was thinking about that. I was thinking about, we bought our house in 2010. And one of the first things is I went back to HUD Online has a place where you can go and where you can see where the historical rents have been. And I looked at it, and we locked in our rent in 2010, and that was rough around that time. It was between $1,600 and $1,800 a month. Now that same, if I wanted to rent my own house right now, it's $2,800 a month.
Right.
Yeah.
Yeah, It's really, to me, the untold story of the housing market.
Mm-hmm.
Everyone focuses on the price of the homes, keep going up, up, and up.
Right.
Everyone focuses on that, and I get that. But what no one's talking about is that increase in rents.
And that's the thing that goes hand in hand. I mean, you and I both realize that on the ballot this year, there's a few measures for rent control, but we're going to be another 2 years out before we see if that even materializes.
Right, and what it means and what's the impact.
Right.
We have rent control in New York City.
Mm-hmm.
There's a lot of places that are very expensive to rent in New York City.
They have rent control in San Francisco. It's still very expensive.
So however that shakes out, who knows? But the bottom line today, what's really attracting a lot of buyers coming in and buying a home is I can lock in what I'm paying every month, and I don't have to worry about that changing.
Mm-hmm.
The ancillary benefit is I've got a $600,000 home, price goes up 5% next year. Now I've got $30,000 in equity.
Right, absolutely. So here's a quick question. How long would you say a person might want to stay in the house if they're thinking about it? Because obviously we've got a lot of people they transfer their job, but what do you feel like is the minimum time a person should stay in the house?
I think it makes sense, assuming we have this traditional increase. We've averaged about 6% in San Diego County over the last, I think, 45 years.
Mm-hmm.
It's in fits and starts. It's never a smooth increase. But let's say homes go up 5% a year. You start getting into year 3, it's hard to make an argument to keep renting.
Absolutely.
You're going to be here for 12 months, you just don't know. Okay, I get it. 24 months, maybe you start taking a hard look at buying something.
Yeah, I'm with you. I'm thinking the exact same thing, somewhere in between 3 and 4 years. If you're going to be there, I've got clients now that they're getting ready to make that move after 4 years, and they're quite pleased with their little nest egg that they've developed in their equity.
Well, and if they don't sell it after 3 to 4 years, imagine keeping it. Now you're on the receiving end of the rental.
Mm-hmm.
I'm going to buy a home. I have a lot of clients, military, Navy guys, and their families. They buy their first home here and then keep it forever. Mm. And it's just a cash cow for them over time.
Absolutely, especially when you're talking about, I got a place. Maybe I bought my first place in some place close to water, up and coming place in San Diego where there's a lot of opportunity going on. We like the area, in Imperial Beach. That's just it. There's a new base down there. A lot of people moving in the area. It's totally transforming. Businesses coming in. What would be the first step that if somebody was looking to do that?
The biggest question is in someone's mind is, can I even do this? Mm-hmm. And I think unfortunately some people don't do the right homework. They do maybe an online calculator tells them this. Mm-hmm. Or they look, I need 20% down, so I don't have, Tracy, $120,000 to put down on a home. Well, you and I know that's a lot of misinformation.
Absolutely.
So
let's set the record straight.
So get with someone like me who can help you understand the buying process and really vet out what is possible. Because that's what we want to know. That's what everybody wants to know. Is this even possible?
Yeah, what are my real options?
Yeah. And so take a look at your credit, take a look at your LES or your pay stubs, and figure out, can I do this? And one of the things that, you and I have worked together for a decade, mm-hmm. something like that, and I know you're the same way, we don't tell people yes if they can't do it.
Right.
If for some reason you can't do it today, that's the key thing that I say. You can't do it today. Let's map out a plan where you can do it in 12 months, 24 months. And I'm happy to do that work for someone, but the really not knowing is almost, I look at it as almost criminal to yourself, mm-hmm.
So first, get the right information, get the right knowledge, obviously. After that, should they be looking at anything as far as debt or anything?
Well, it depends on the type of loan program, and there's some very basic numbers, but with VA, the debt to income ratio, that's the total amount of your debt payments. Mm-hmm. Let's say you've got $5,000 on your credit card, your $100 a month payment.
Right.
So that's $100 in the debt column. So you total up all your debts, including the home that you're going to purchase, the full payment, divide that by your gross income.
Okay.
And if you're under 50% VA, we're having a conversation that this is possible.
Okay. So should be at least below 50%.
Below 50%.
Got it.
And then we can figure out if we can't make it happen. Let's say we're in a program that requires 45 or 43. We can have a conversation with the client saying, okay, here's what you need to do over the next 6, 12, 18 months to make that happen, and give them a goal to work towards. I've worked with clients, I think my longest is 3.5 years it took.
Wow, some patience.
But they did what was required. They own a home. They bought it, I think, 6 years ago. So I think they have 150,000 of equity because they bought a home 6 years ago.
So how about, I've heard about a couple new programs coming out. Maybe you could shed some light on that. I know that a lot of people have seen opportunities and things where there's deals out there to be had if you're willing to put in some work and do some fixing.
Yeah. You know, as a blanket statement, I say now, there are times I used to tell someone, look at their very basic information, say, I can't help you.
Mm-hmm.
With the new programs that have come out, I've stopped saying that. I ask more and more questions because there's a lot more flexibility than there was 5, 6, 7 years ago. And one of the key changes has been for the self-employed borrower. You own your own business. Everyone tells you, I can't get a loan because I'm self-employed. Mm-hmm. Those days are over. There are programs out there specifically designed for self-employed borrowers.
Now, I had heard a thing or two. Is the VA now doing almost like a partial, like almost something compared to like FHA
construction loan? It's not good. It's not a really attractive program.
Okay.
They're just not there yet. It's trending that way. I went to a class on this a week and a half ago. And this guy who's been doing VA loans for 30 years was like, I mean, his knowledge was crazy. And he just said, it's just not a good program right now.
Okay.
Especially compared to FHA.
Right.
That 203K.
Yeah, that 203K. So there's a couple options out there for somebody who's looking to get a fixer and do the work themselves.
Yep, absolutely.
Man, I mean, so what do you think the first step would be if a person, you know, they get word, maybe there's a hardship going on and they got an opportunity maybe to acquire a property?
The first step is to call you, to call me and say, here's what I'm thinking. Mm-hmm. Here's what I want to accomplish. What do you need from me to figure this out?